All right, Larry, welcome to the show, my friend. I'm excited to have you back on. A lot has changed since we've had you on the podcast. What was that, 2000 and maybe 18? So got a
Wow.
lot to catch up about.
Time flies, my friend.
Isn't that crazy? It's nuts. But
I can't believe it's been that many years. I feel like
I
we
know, I
just,
know, man. I feel like I've known you for a half decade now, bro.
yeah, well, we go back a long time.
I think we met up in the fall of 2015, actually. So it's been 7 years now.
Wow.
Isn't that crazy?
Yeah, well, listen, you've come a long way since I met you.
So have you, my friend. So have you. You used to be a home investor. You're a home investor refugee, you know?
Yes, yes. One of many.
Anyway, I digress. So I want to cover two things on this show that you have done in your business as of really, I would say recent, but it was about 3 years ago. You
Sure.
guys moved to a big wholesale operation, and you guys have also been buying a lot of rentals. So I want to cover both of those things on today's show as like the main, I guess we call the meat and potatoes of the show. Before
Yep.
we get into that, how did you kind of get involved in the real estate business before? What were you doing before real estate, basically?
So, I mean, just quick background. My background is in accounting, BS in accounting. Started out working at Ernst and Young. I have my CPA, did that for about 3 years. All my friends were making a lot more money than me working on Wall Street around 2000. And I said, you know what am I doing? Let me go.
Yeah.
So I worked on Wall Street for about 5 years after that and did really well. Made a lot of money, but I hated it. I hated every minute of it and said there's got to be a better way. So I quit, which again, I maybe would have did this a little differently, but I quit and I got a job as a real estate agent because I thought that was the
Ooh.
best way to get into real estate investing, right? Isn't it? And somehow I digressed a little bit and I was an agent for a period of time, but that actually I realized I don't want to be an agent. I want to run a real estate brokerage company. So formed a real estate brokerage company. Fast forward 7, 8 years, we were one of the largest in Manhattan. Um, we had multiple offices. Actually, we had a partner dispute towards the end of it. We did a lot of mergers to get to where we were, and this last one was a big merger. And what happened was that ended in a fireball. And the only good thing about the partnership is that I did meet Frank, who was my existing partner. He is not the person we got into a fight with. It was another partner. And anyway, long story short, I ended up making a good amount of money. But then once this thing erupted in a fireball, I really want to stay in real estate. I had no idea what I was going to do and how I'd support my family. So that was a little bit of a difficult time. I had lent some money to a friend of mine who is a home flipper, and I saw how much I made, and I saw how much he made on the HUD. And I was like, wow, like that's pretty good. That
Yeah.
is how do
Yeah.
I do that? And we did another. Frank and I did it together. Did another money lending deal, same situation, and I wanted to figure this. I said this could be interesting. So that then we joined Homevestors, as we talked about earlier,
Yeah.
and which was great. You know, I learned quite a lot there. And then at some point we realized we can probably do this on our own
Yeah.
and branched out on our own. And you know, we've grown a pretty large real estate investment company, which is SDF Capital, which we used to do pretty much like you alluded to, almost all fix and flip. And anyone that does fix and flip probably knows it's very hard to really you can systematize it, but it's really hard to run that like a business because there's constantly things that break down, problems. You know, there's the best process, but at least for us, we found it hard to scale that. Very hard to scale it, and you know, material prices going up and contractors and anyway. Long story short, we decided to change up the model slowly and to just cherry pick the flips in the areas that we know with contractors that we know could do it and started doing that. And then little by little, we transitioned almost fully, not fully at this point, but almost fully into wholesaling. And as you know, Greg, and anyone that is in this business, it's a lot easier to scale that business. There's a lot less capital at risk. It's a lot easier to go quickly. So that's kind of I mean, short slash long story of it. But that was what I was doing before, and that kind of where we are and what we're doing now. I didn't get into the rentals. I know you had some
We're
questions
going to
about
cover the
that.
rentals on after we discuss
Okay.
the transition. So the biggest thing I've watched you guys, obviously, since you started, we kind of got started at like a similar time. Like I was brand new, you were brand new to real estate investing. So we kind of got started like right, like maybe 2016-ish, kind of like year range. And I noticed that you guys were really, like you said, huge on rehabs. You guys, I mean, at one point, God knows how many rehabs you had going on all over the Northeast. I mean, from Connecticut to Pennsylvania to New York and New Jersey. So when it comes to rehabbing, a lot of people, they think it's sexy. They want to tell all their friends they're flipping houses, like legitimate flipping house, fixing and flipping houses.
Yep.
You have learned a lot from that business. So in your opinion, besides the obvious, there's a lot of things out of your control. What about the renovations like really would get you guys in a position where like there was a longer sales cycle, or like what about the renovations? Was it the permits? Was it what was the biggest bottleneck that you saw? Because you mentioned a few of them, but what was the biggest thing that really got you and Frank to realize like we got to do this a different way?
I think the biggest thing is cash flow. What starts to happen is it becomes a beast that you have to feed. So meaning you have 3, 4, 5, 6, 7 projects that actively need money because you're paying contractors. But then what happens is the sales cycle, like you said. I mean, it's not one particular thing. What happens is something you expected to close got delayed. And it got delayed because some uni search didn't come in. It got delayed because the commitment came in later. Whatever the reason, it got delayed. So now all of a sudden I have 6, 7, 8 rehabs that I actively need to pay into. And I had money that I'm supposed to get that I'm not getting.
Yeah.
So, and that keeps happening
Yeah.
over and over. So that's stressful because we do have a decent amount of capital, and it just uses a lot of capital very, very fast. So it becomes really capital intensive. So that I'd say is a big challenge, because again, even if you have a ton of capital, it's really hard to manage it because the timelines always change. The second thing I think would really just be there's so many uncertainties, meaning that we start a project and normally we do a good job of figuring out what's going on and putting our scope of work together, but things come up, and those things come up that can cause a delay, or a contractor that has an issue. So it's just there's a lot of uncertainty in the rehabs, and we had a project manager who did a great job, but we were overwhelming him, and there's only so many projects someone can manage. So that's another fixed cost that we had. It's just the oversight. Someone says it's going to be delayed. Okay, now this one is delayed. So all of a sudden, it just literally, it's very, very difficult to manage. And quite honestly, it was never my background. I'm a financial guy. I'm a numbers guy. Frank is more on the sales side. So it's neither one of us like say, oh, we love construction. I joke and tell people that, they're like, well, you're in construction. Like, I can't even hang a picture. So, I mean.
Me neither. I had someone come to my house, a handyman come over to hang all my shit in my property.
Oh, yeah. I mean, likewise. So it's kind of funny that we were renovating a house and still do. But I would say just the uncertainty. And then now in today's market.
Oh, my gosh.
I think that the rehab costs are not manageable because of supply chain disruption, and you don't know, material pricing is out of control. And then the second thing that's happening today with the changing market, and this has been going on a little bit, is the buyers are picky. So you'll come to a home inspection and there's 50 things on there, whereas in the past we'd say nope, 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 and now it's like, you don't do these things, we're not closing. No deal. So it just became too much, and again, we'll cherry pick some rehab. So don't get me wrong. I feel like if we did 1 or 2 projects a year, I'd love it because it's fun and you can figure it out. But and there are some good spreads. But as a business, I think it's a very tough business to scale unless you like love it, and maybe say you're a contractor that decides to get into flipping, not like a flipper to get its contracting.
Yeah, it's the skill sets, like you said, and you taught me
radically different.
You taught me a lesson a couple of years ago. You said the thing with wholesaling versus the rehabs is that with a rehab, there's multiple points of failure. With an assignment, there's 1 point of failure. The deal doesn't work out. Maybe you lose your deposit. Maybe you don't. With a rehab, like you said, I mean, and you and I are in the same market. Yep. Every village has their own building department. The bureaucracy is it's unreasonable as an understatement. You have permit problems. I mean, I don't like to get permits. I barely get them. If I do, I have to. You have stop work orders. There's so many things that can cause, and this is if you buy the property right and your numbers are right. Like this is like
correct.
Excluding that. This is like in addition to the fact that you have so many things that are I wouldn't say against you, but they're just out of your control that can cause I mean, I've had so many run-ins with building departments, me just doing work, having them catch me, put a stop work order on there. I mean, you had the same. If you want to do volume, renovating in the Northeast is not an ideal strategy. I mean, if you're doing 2 or 3 a month, maybe, but if you want to do 6, 7, 8, 9, 10 projects a month, you'd have to be vertically integrated. You'd have to have
Yeah, I agree. I think
yeah,
if you have a construction company and you love it, or you have a
and an
partner that is
expediting
like
company.
an
Yeah,
expert at construction and that's the core competency, yeah, no question.
you could scale
Then
it.
I'd probably a great business, but I still think there's too many points of failure. I
Yeah.
totally agree. And then the other thing, just getting back to kind of one of the things I didn't like, or one of the reasons why is, in the Northeast, as Greg alluded to, we have harsh winters here. So you got to make sure every single house has the heat, because if the heat, you have a problem with the heat, you're bursting a pipe, which has happened to us. So then all of a sudden, anytime there's a weather issue, I'm like, oh my gosh, like what's going on with these properties? And you forget that you have a property here. Then you need snow removal. Then you need someone to get the snow off the roof. So it's
Lawn care in the summer. Yeah.
correct. It just the complexity that, I mean, we built out in Asana and various project management programs, like, all the things to do. And it's hard to tick them off when you have all these properties and then have accountability. So it is no small feat to rehab. But again, I don't want to, anyone that's listening, I don't want to say, hey, don't rehab, because there's a lot of money to be made, and it's good. It's just, I think if you're going to scale and run a large business, I think it's very challenging to do it again, unless it's like a core competence or you love it.
100%. And I think there's just, if you're not vertically integrated at least in the Northeast with I know a guy, I know a guy on Long Island. His name is Charles, and he's a big rehabber, and he has a permit company, he has a construction company, and he has a home buying company. So those companies all feed each other. And if you don't have
Smart.
that, it's just, yeah, you're going to be dealing with all this uncertainty. So I digress. So let's transition. So you obviously went from big time rehabber. Now you're doing a few projects here and there, but you guys are doing serious wholesale volume. I'm on your list. You guys are, I would say, the biggest guys in the market. To be honest, you guys are the biggest guys. So how did you guys successfully transition from renovators to assigners? Because really, I mean, you guys are putting out like 1 or 2 deals a day. Like I see my emails and I see you guys have stuff in PA, New Jersey, Connecticut, New York, like everywhere. How did you guys make that transition? Because at the end of the day, like wholesaling is a completely different business, right? Like you're really in the sales business at that point.
It's a different
Nothing to do with
business.
construction.
Yeah. So, I mean, look, just to rewind, my background, like I said, was in real estate brokerage prior. So it's very similar to brokerage in the sense of you're just selling. And so is Frank. So I think that for us is more of a natural skill set than construction, because we ran a brokerage business. So that was an easy transition. And then, building out the buyers list, and, I don't want to say we're experts on marketing, because we're not, but we're pretty good at it. At least that's how we get a lot of our, we go direct to seller, as do you, Greg. So we're pretty good at that. So it's literally the same thing. You're just flipping the process instead of you marketing to buyers. So it was easy, a very easy transition for us. I think, like I said, mostly because it was our business prior to this, very similar business. So it wasn't that difficult to do.
Because I mean, half the business was already getting done, the marketing. You were still marketing for properties when you were rehabbing. You just flipped it around
Exactly.
to buyers versus now. Do you like, what does your team look like? Like who, because you and Frank are, you don't do this on your own. You have a decently sized team. So what is let's just go, what is your wholesale department? Like, what does that team look like? And then we'll go into some of the processes that are established now.
Yep. So this is more what kind of where Frank sits, but I'm pretty familiar with what goes on. So essentially, as we talked about, we do direct to seller marketing. We do a ton of direct mail. It's still our biggest channel.
Same.
So that we outsource the direct mail. We have a in-house PPC/SEO person. So that was a recent hire that we made. So that is done in-house. So he is an employee. We have, I mean, those are pretty much our 2 primary sources. And then just in terms of how we're structured on the acquisition side, we have 3 acquisition specialists. We have a virtual lead manager who really does more follow-up. Actually, we have 2 virtual lead managers that do follow-up. On the dispo side, we have one, we had 2, but now we have 1. We have 1 dispo full-time employee and 2 dispo VAs.
Okay.
And on the accounting, obviously, we have 1 accounting person. We have me and Frank. I'm more on the operations and the finance and raising money. for our various funds and projects. And yeah, I mean, that's pretty much
That's a good sized team. That's a good sized team. So you basically got a full-time person who does the internet marketing, who's a direct employee, not a vendor. And then so you said you have three acquisitions representatives. So they're buying all these houses, I'm imagining, over the phone, because you guys are doing volume, right? You guys stopped doing appointments a couple of years ago, right?
Yeah, we are 100% virtual. So it's a really cool model that we have.
Yeah, it's interesting when you start doing it, right?
Yeah, well, it's kind of I had a limiting belief, as did Frank, that you can't virtually wholesale. If people would tell us, "Hey, virtual wholesale," I'm like, yeah, okay, yeah, no
I
in-person
told you that and you
appointments.
thought I was crazy. I'm like, no,
Yeah, and others
so
did
easy.
too, and that's kind of our whole business. And
So,
we're actually, I think I told you this, we're actually going to be doing some education around that too,
yeah,
about virtual wholesaling, which
yeah.
is it's kind of cool. So yeah, but that's we virtually wholesale. I mean, the only downside to virtually wholesaling is, again, like you said, we don't physically see the property, so sometimes we rely on the sellers, and obviously when people come in and look at them, and sometimes the buyers will say, "Hey, this is roof is shot, seller doesn't represent that." So you have those types of issues, but we kind of figure that out.
I mean, the thing with I tell people all the time, listen, if you can go in person versus over the phone, I think anyone would say, like, okay, there's probably a better chance to build rapport and do that. But my argument to that claim is like, listen, if you got to get in the car, go for 30 minutes, drive there, sit there for 30 minutes, drive back. Now you burned out an hour and a half to make one offer. I can be on the phone. My team can be on the phone negotiating these things. And if you get your offer rejected in 15 minutes, you can make another phone call 15 minutes later and pick up another house. I've just found the scalability, and especially when you're dealing with acquisitions people, it's easier for them to do it over the phone, especially too, because like if you have an acquisitions rep and they drive out to the property, now they're emotionally committed because they drove 30 minutes.
Yeah.
It's some gas money. You see what I'm saying? So I'd rather get more offers out over the phone, in my opinion, than maybe get fewer offers out and do it in person, just because, like you said, it's tough to scale. Like if you're physically depending on
No
driving.
question. I do agree with you, though. I think if you have the option to physically meet someone, it's probably better, and chances are you would get the deal. At least if you're a reasonably decent salesperson with a good offer, you'd
Yeah.
probably get the deal over a virtual wholesaler.
Yeah.
I would agree with that.
We'll make it. I'll give you an example, because we buy in Delaware now too, because my acquisitions rep lives there. And normally we buy everything over the phone, but I'll give you a quick story. Last week we had a hot internet lead that came in, and he was asking me for some advice. And I said, listen, I normally would say don't go on the appointment, but you should go on the appointment. So he goes on the appointment, doesn't get the deal the first time. Seller wanted more money. They were shopping it around. I said, listen, we reviewed his call together, and I said, here's the deal, bro. If you go, you got to find an excuse to get back inside their house. You're like 2 inches away from the touchdown zone here. I said, you just tell them that you forgot to check the attic, because he lived down the street from the house. And I'm like, just go back out there. I'm telling you, do this, do that, and you're going to get this property. I promise. Goes out there, gets in the attic. He's like, calls me up in the attic. He's like, hey, I'm in the attic. And I'm like, all right. Now on your way out the door, just say, hey, by the way, I know we weren't too far off on price. Why don't we just talk about that? He ends up getting the deal in person, and we assigned it already. But in
Nice.
that scenario, I would say if we were not in person there, we probably wouldn't have gotten that problem, to be honest with you, Larry.
No, that makes sense. That makes a lot of sense. How was Delaware, by the way, as a market?
I did a fix and flip and broke even. I wasn't happy about that. We did a little baby
Better than
assignment.
losing.
Yeah, yeah. But now, last week, we put together 50 grand in assignments just last week alone. So we're going to keep putting our foot on the gas down there, because there's no bullshit attorney stuff. I mean, you have a closing attorney, but they're not like in New York. They don't represent anybody. They're just in the middle. So our sales cycle down there, I've noticed, is much faster. Like you can close a deal in 2 weeks there without any.
I love it. Yeah, that's great. That's great. Maybe we'll join you.
Yeah, sure, man. There's tons of room there.
I know.
I'll tell you, the competition there is not, there's a lot of people there, but I've realized this in general. People are always like, oh, there's so many buyers trying to do this. Listen, if you're a half decent salesperson and you can have a conversation with somebody, you don't have to worry about other people. It's not like it's that big of an issue. I mean, if you're good on the phone and you can build rapport, I say there's room for everybody, right? Like there's everywhere.
One of the things your listeners should know is that we do deals together. So we are in the same markets.
We just did one 2 months ago.
Yeah, we compete with each other, friendly, always, and but we do stuff together. So I mean, it's really, that's a great thing about. I mean, if you're a good honest person and people in your market are as well, you could really have a lot of fun together. So we
And
have a couple other people we do the same thing with.
yeah,
So a lot of people find that to be odd or weird, but it's, it's not at all. I mean,
the way I look at it is like this. If let's say you and me have the same lead, okay, and we both know that because the seller says they're talking to other buyers. I would rather go in with a partner or a JV partner 50-50 and guarantee we get the deal than
yep,
try to sabotage each other, bid the property up, and now one guy makes, a little skinny margin, the other guy doesn't get the house. You're better off just teaming up and collaborating versus like
agreed.
you know,
Abundance mentality, right?
100%, man, 100%. So you guys have obviously scaled up the business on the wholesale side before we transition into rentals. Now, you and Frank, I mean, don't really have, from my knowledge, I mean, you guys seem to have a pretty solid team established. So, like, what functions in the wholesaling business do you actively do, if any, at this point?
So, I'm not involved in the day-to-day transactions at all. So there's really no involvement. We do run on EOS. So of course I'm in a level 10 meeting once a week. I am, I guess, sit at the head of the accounting. So any of the accounting ultimately is something that I oversee. We are, I'll get into it. We are in the process of raising a rental fund. So that's been taking up a lot of my time lately. So I would say also there's always, if there's some kind of a problem, which inevitably there usually is at some point, that somehow comes to me. Um, what else do I do? I think, like I said, raising money. We have multiple funds that we currently operate. So more so talking to the investors there, keeping people okay, raising money, which is something that I do as well. And then, we do powwow on the business, so we've been trying to cut some expenses recently. So that's been keeping me busy as well. And I don't know what's going to go on with the market, but we want to be ready for it. So we're just making sure we're leaning up.
Yeah, for sure. Have you guys found it a little harder to assign stuff recently, or you guys still finding a way to get all your inventory moved
No,
out?
we are having the margins are starting to slim.
Yeah, I'm seeing my margins go down a lot, man. Sucks.
And the other thing, and I don't know if you're seeing this, we're in some areas in like Pennsylvania, for example, that we'll get some deals on the contract and there's no buyers in those areas. So
Oh,
it's
that's happened to me many times, dude.
yeah, so that's been happening a little bit more often than we've had in the past. So that's frustrating. It's a lot of work for nothing. But yeah, I mean, I think it's just I think we're going to be okay here in the Northeast. I just think it's going to continue to slow.
It's just going to go back to what it was in like 17 and 18, where you had like
Yes,
decent days on market and the property wasn't overvalued. It's just going to go back to like the old days or the old
correct.
days, that's the truth.
I agree. We're not overbuilt here. There's still a housing shortage. People still want, if you're going to renovated homes. So I think the home flippers will do well. Just they have to buy it a little bit cheaper, and we have to
We got to buy it
acquire them
cheaper.
cheaper.
I
Yeah.
mean, I was telling someone yesterday, I said, listen, I was getting spoiled. I was like raising money, whether it was a private investor or hard money lender. And I wasn't even making interest payments because I would sell the property before the first payment was due. Right.
Oh, that's awesome.
I think those days
I
are
love
over.
that. I love that. Yeah,
Yeah.
I agree. Yeah, we've had some of those. Not as
Yeah.
many as I'd like, but we definitely have.
You just get, they're like, oh, by the way, I don't need to send you a payment this month. You're getting paid off tomorrow. But anyway, I digress. So let's transition more into the rental property. So obviously you've been buying and selling a lot of properties. You have a lot of experience. Now, when you're looking for rentals, right? Because this, I know that you really like this this part of the business. What do you look for in a house to decide, at least in our market in the Northeast, what is worth keeping as a rental versus what is just not going to cut it for you?
That's a great question. Yeah, the other thing, just to think about what I do, I kind of got to think about what I do every day. But rentals is a big thing. I am analyzing a good amount of rental deals.
Yeah.
So yeah, just a couple things. Number one, it needs to be in an area that is desirable. What do I mean by that? Maybe the school system is relatively good. It's close to centers of employment. We're not big into rural markets on rentals. Not that we can't be. It's just not something we've had a lot of success with. So I really
Same.
like to kind of stay in an area that has a desirability factor, and again, it could be close to school, whatever. Just some area that's not a we're not
Economic
really
driver. An
yeah,
economic driver. Yeah.
and we're not really big into like high crime areas. We've had quite a few in those areas, which it's just very management intensive. And although the returns on paper look phenomenal, it's
It doesn't make sense at the end of the
Yeah,
day.
for us. I mean, again, that's our market. But I also we like a more typical house. So that's like we'll do a 2-bed rental, but like 2 to 4 beds, 1 to 2 baths. Nothing real. We have a couple big ones. As Greg, my favorite term, which is my accidental rentals. So we have a couple of those with flips gone south. But yeah, I would say 3, 4 bed, 2 bath, in relatively decent areas, and we kind of look for the taxes to be reasonable. We want to be about 52% in terms of all the expenses, all in from an NOI,
Yeah.
Expense ratio rather. So that's kind of high because the taxes are high in the Northeast.
Yeah. But the rents are a little high too. I've noticed in Delaware that you got like $1,000 a year property taxes, but like there's a townhouse I did that I fixed and flipped. That thing only would have rented for $1,650. My mortgage payment with because of the purchase price, it wouldn't have made any sense because the rent was low, right?
Yep.
So it's kind of inverse in the Northeast.
It is.
You get high rent.
High rents. We have high rent. The other thing that I do is we have a rental screener, obviously, so we run it through the rental screener.
Like a software?
No, it's our own rental screener. I'm happy to send it to any of your listeners if they want to see it, or to you, Greg, if you want it. But basically, all we do is we'll run it. We'll put in what we think the hypothetical rent is.
Oh,
we'll put in the taxes. We'll analyze it, and then what we'll do is we'll then look and say, okay, if we get 70%, we get 75% on the takeout. How much money do we have to keep in? If we buy it deep enough, and we've had these conversations, a lot of times you can get most of your money out. So those are tough situations for us because we could wholesale it and say make 20 grand, or keep it, maybe get our money back and make $200 a month. So the question becomes, what do you do?
I mean, you're talking about the burst strategy. Yeah, it's a double-edged sword. I mean, it's a good. I'm glad you brought that up because this happens to me a lot too. It's like,
I take the money. Not a bad problem to have.
Do I take the money? So I'll give you a quick example on this. Actually, this is actually a deal that you bought for me. So there was I think it was like 34 Patio Road or something like that. You guys fix and flip the property in Middletown. Like
I remember that one. Yeah.
I wholesaled that to you guys. I made a lot of money. You guys made a lot of money. So I think I got it for 50 and sold to you guys for like 75 or 80 or something. And you guys sold it for yeah. So I got that deal done. And then I got a lead. This was down the street, like maybe a mile away. Yep. Same kind of house, like one of those like Middletown properties. If you're not listening, Middletown is a city in Orange County where it's generally decent for rentals, depending on what you put.
Yeah, we like Middletown.
Yeah. So it was the same property, much better shape with a tenant inside. I got mine for 50 that I sold to you. So this lady said that she, wanted to sell it as is. So I offered her 65 for this property. And I was just thinking, well, that's a great offer if she takes it. So I bought this thing for 65 and I refied it at 100. So I put like legit cash in my pocket after I purchased it. So I got literally got paid to buy that property, refied it for 100. Now I still own it. I got 2.9% interest, 15-year, fully amortized. I make $600 a month and I have, literally no money in that deal. And it's worth,
that's phenomenal.
It's $1.75. It's worth $1.75 right now. I owe like 93 because I've been paying the mortgage. So it's like with a property like that, like I probably could have wholesaled that thing for like 110. But
that's the question, right? I guess it depends upon your cash position, depends upon what your strategy is. The only negative thing we have in our business is we do have a large overhead, and sometimes some of those decisions are forced upon us. So stuff we would have rather kept, we kind of have to sell it because we need the money to kind of keep the
machine running.
But we have been transitioning more and more to buy and hold. Just as a good compliment. But that's a great deal. I mean, that's an awesome deal.
Oh yeah, I mean those deals. I like. There's another one I got. I just bought it in cash, and it's like it's worth 70. I bought it for 46. I actually was doing that deal when we were at that Florida golf trip.
I remember that. Yeah, look, that's where I got this hat, by the way.
Oh yeah. That was.
That's why I wore it.
Yeah, I've never seen that property. But so what are you guys kind of doing now in the future with the rentals? Because obviously we just talked about why you buy rentals and how you buy them, but like what are you guys looking to build out in the future for your rental? Because I know you're really involved in money raising and really building the rental company up.
So the one thing that we're doing right now as a company is we are in the process of raising for a rental fund because we think the market is real. I mean, it's not really what we think. If you see like some of the biggest asset management companies, Blackstone, all the other ones, they're raising billions of dollars to buy single family rentals. So we're doing something similar, obviously not at that level, but that's kind of keeping me busy now. So we're going to put that together now, and because we think it's a really good time. So that's something that we'll do, and then we'll continue to build the portfolio with the ultimate goal is if we can do less wholesaling and keep more of it, then that's what we're going to do. And now we can't, similar to the way we went from fix and flip to wholesaling, I'd like to go from wholesaling to buy and hold. It's just there's no way that can happen overnight because
No, completely different
it's
business.
just completely different business. So that's something that ultimately we're going to start to switch into, but it's going to be a long transition.
Have you considered just wholesaling yourself the property for like a $5,000 to $10,000 like assignment to pay the overhead and then you own the asset? Has that been something you'd consider?
Yeah, we have. The only caveat we've got there is, our average wholesale fee is probably in the 20s. So we'd have to then pay that, and by the time we can refi it, but usually these deals, they're good deals, but we're going to have 20 grand in a deal, 30 grand in a deal,
That adds
which
up.
is totally fine. But after a while, it starts to add up. And while we still have to pay our marketing, we still have, so that's kind of where the rub is. If we could do it like that deal you just talked about, and that was a regular situation, we would have done already
It
because
would have, yeah. I
it's a
mean, if I could
no-brainer.
find one of those deals a week, I'd be on the back of my yacht doing this podcast right now. I mean, think
Oh
of,
yeah,
yeah,
well,
it was
I think that's coming. It's just a matter of years for you. But I do think that if I were starting out, it would be something, especially in this market, I'd strongly consider figuring out how could I build this into a more of a buy and hold company.
interesting.
If that's an option, if you want the quicker cash and depending upon your cash flow needs, then probably not an option.
Yeah. No, that's, it's interesting you're saying that because a lot of people, they get into this business and they have this theory where they want to quit their job. Okay. And then they want to, fire their boss, even though you're going to start working for another boss who happens to be a psycho, which is yourself.
Totally. Yep.
Right. And then they get into this like flipping, wholesaling hamster wheel. That's truthfully what they call it, a golden hamster wheel with diamonds on it.
So
And
true.
then they get stuck. And I'm there. I think a lot of us are there. And we have rentals, but we don't have enough rent. I don't have enough rentals right now to retire, to be completely straightforward. But
Yep, same.
the whole thing is like the goal was to get to the rentals, but like this wholesaling flipping thing started making a lot of money, like netting a lot of money. And then it's like you kind of get stuck into this thing. So like you said, if people can start with the end in mind and just try to make that transition through the wholesaling and flipping gap as fast as possible, it's going to be a lot easier to get to your end destination. I have friends who are like, and I will say this, in our market in the Northeast, I would say it's a little harder than most. Not saying it's impossible, but we're dealing with high purchase prices and high taxes. If we were in Alabama, not saying the sunshine would be shining and be rainbows everywhere,
Yep.
but you can pick up properties in those areas cheaper, and it's a little bit easier to do business down there. I'll just be honest with it; it's just easier. So our market, there is that little factor there, but we just talked about virtually wholesaling, so you can do it virtually, and then you got no excuse. So
yeah, you're right. We
advice, man.
could be good, but no, I think that ultimately, I think that would be a route to go. But again, it just depends on the individual, because right now, as a wholesaler, as you said, you could be wholesaling anything, right? I mean, we happen to be wholesaling real estate, but you might as well take advantage of it. And then the other thing not is also the tax benefits. I mean,
Oh my gosh, man.
as real estate investors, especially wholesaling, we're taxed as ordinary income. And what we've done for many years because we're real estate investors is that was another strategy for the rentals. We bought them to minimize taxes, and that's been a really good strategy. So you get that depreciation, and you can get it against your active. I'm not giving anyone tax advice, Greg, so I don't want to have. But I'm saying that's
We know it's not. This is just friendly conversations. Well, I'll tell you what. I did 3 cost segs last year from DIYcostseg.com.
Mhm.
That saved me alone. Like, I mean, I still had a pretty decent tax bill, but like those cost segs alone, like I think I got like a 4-to-1 return on whatever I spent with the.
Oh,
It
easily.
was insane. I was like, oh my gosh, this is crazy. Like, you'd be stupid to not do this. It was like
The only negative I will tell you, because
What is the negative?
I just had it this year. Well, there's no negative. So let me say that there's no negative to buying rentals and doing a cost seg. The cautionary tale So last year, we're in 22. So yeah, in 21, we did some opportunistic rental sales because the market was just bananas, and we decided to sell some rentals to just kind of get a little bit more cash. So we did that, and these are rentals that we had cost segged and took all the depreciation. So when you sell them, what happens is you have to essentially add back all that depreciation that you took and put on your tax return. So essentially, all that, it's a hamster wheel that you have to keep buying. So we had this like massive hit because of the depreciation recapture on the stuff that we sold. So there was a long-term capital gain and then the depreciation recapture, which screwed up our taxes.
Oh, I get it. You had to recapture all the deductions you made.
Correct. So bear in mind, unless you're buying every year and you're buying more than you're selling, you can get hit with a big tax bill.
Yeah, no, that makes sense. I sold so here's a scenario for you. This is not tax advice, by the way, listeners. But so we've spoken about this before. I sold that mixed use building.
Oh yeah.
At a loss, but I cost segged it to get
my
taxes down. Right. But I cost segged it. So am I going to have to recapture that, or am I?
Yes.
But I lost money though. So what am I recapturing?
So what happens is you sold it at a loss, but I didn't see your return. I didn't do your return, but you would essentially have to recapture whatever you took on the cost seg. That depreciation is recaptured. The depreciation has nothing to do with the loss. Right? That's just like your phantom kind of use of the property over time. Now, because you had a loss, it may not be as bad. Yes.
Yeah. It might wash.
But yes, if say the cost seg was 50, 70 grand, that would have to be all added back.
Yeah.
But if you lost, 50 grand, then it could net itself out.
It probably would wash itself out. Yeah.
Yeah.
Here's the
unfortunately or fortunately, we didn't lose. We made quite a lot and had to recapture depreciation. So that was where it got a little hairy.
Yeah, for sure. All right, so we're gonna start to wrap the show up here. Before we wrap the show up, I like to talk about real deals that people are doing. And we're gonna air this on both podcasts. I want you to sounds like an air horn going on back there.
Oh yeah, I'm gonna say I can close these windows.
No, you're good. You're good. Sure? So I want to talk about a real successful deal that you guys did, whether that was a rental or a flip or a wholesale. And then I want to talk about after that a deal that you did that, as some people would say, was a seminar, so people can kind of see the context on the good and the bad in this business.
Yeah, well, if we listen to the first podcast, I talked about a lot of my seminars. I hope to have less of that. Sure. So you want to talk about, Greg, a deal that's in the works or a completed deal that's
whatever you want to talk. A good deal that's either in the hopper right now or you did it, whether it was a rental, a flip.
We have a phenomenal deal in the hopper, and I can't take any credit for it, so I don't know if I should talk about it, but my team
let's hear it.
The credit. So this is a deal in Pennsylvania, which you get. Sometimes the best deals are the deals you don't know that you did.
Yeah, right.
And actually, I'm digressing, but I'll start with this, that I can tell another good one. So we did a deal, or we have a deal going on. We just closed on it in Pennsylvania. We thought it was a good deal. My acquisition.
Single family, multifamily. What are we talking here?
A single family on the lake. Okay. So
Poconos?
my in the Poconos, yes. I believe it's in the Poconos, because we just talked about this. My acquisitions specialist miscomped it the right way for us, obviously, but I think valued it against something that wasn't like lakefront, because he didn't really realize that at first. And the offer, it was probably 40% of the value. So I think something like, we bought this because we just closed the like yesterday. I think we bought this thing for like 130 or something, and the broker is telling us, like, as is, do nothing to it. It's like worth $299.
Are you flipping it, or what are you doing?
So we're cleaning it out and listing it. That's it. Now, let your listeners know this does not happen. Maybe once every year or two we get a deal like this.
Yeah.
So this is going on as we speak. It has not closed, so I don't know the outcome, but the outcome is going to be a really good one on this one. So this is a deal. And again, we talked a lot about wholesaling. We're not wholesaling this.
Yeah.
Because we looked at the spread we're going to make wholesaling versus taking it down. We said
makes no sense. Makes no sense.
So we do vary up our strategy based on what's going on. So we don't only wholesale. We do take down property here and there.
Wow.
So that's a good one. The story that kind of I was chuckling to myself is, Frank and I, we bought something in Newburgh, actually, and it was a 2-family. And this was years ago, 4 years ago or something. And we both comped it wrong because we didn't really know their market that well. And this
City of Newburgh or town of Newburgh?
This was, I think it's town. It was the address is 205 West Parmenter.
Oh yeah.
So anyway, Frank and I called the broker. This is Edwin actually that we called. That's how we met Edwin. And
Yeah,
I think we thought it was worth like, I don't know, Frank and I thought it was worth like 90 grand or something at the time. And he was like, no, we can put this on the market for like 185 or something. And I don't remember the numbers. We were like, no way. And obviously this broker lives in the area, knows the area. Like
Yeah.
he like knew the street, he knew the people that
He
lived.
grew
Like
up in Newburgh.
yeah, so that was a very, very. We did sell that one too. That was a very pleasant. We probably should have kept that because it'd be worth a lot more now. But anyway, those are some good deals.
It's a two family. I'm looking at it right now on the web. It's a 2-family.
Yep. Yeah. So that was a bunch of years ago. We owned that, and we did quite well because we bought it for like next to nothing, and
Unbelievable, man.
misvalued it. You know, we also misvalued the other way, not as much.
So let me hear about a recent doozy. Since our last podcast, I got a bunch of them. So
I have a recent doozy. This was a condo that we flipped in. I believe it was Dobbs Ferry. So Dobbs Ferry is a pretty good area in Westchester. So we were really excited that we got a deal. And
the numbers. What'd you pay for this stuff?
yeah, I don't want to give you exact numbers. I could be a little fuzzy, but I can give you a roundabout because I think I remember the numbers. I think it was a higher price property. So we bought this thing at like 350, 375, something like that. We thought the renovation would be about 45K, and it's a condo. So like, how difficult could the renovation be? There's no roof, there's no
An internal
boiler. So of course, what happened is we had to legalize a third bedroom, but had a window, had a door. The building's apartment was impossible. So we needed a special window, and this was like during while COVID. So the window was like a 5-month delay. The holding cost in this property, because it's a high price property, taxes like $18,000 a year. So the holding costs in this thing were probably like $5,000 a month.
Oh my God.
We could not get it certified as a 3-bed because of this until the windows installed, and the people wouldn't close. So essentially, we were at a stalemate for so many months. I think it was 3 or 4 months just sitting, and nobody would move. Building department wouldn't do anything. We're waiting on the window, trying to get it from someone else. Couldn't get. And again, this is a condo. Couldn't get the window. So of course, I think it was a skinny deal to begin with. I think we bought it, like I said, in the threes. I think with the rehab it was like 50 or something, and we were sketched out to make like 40 grand, 40. But we figured it's in and out.
Easy. It's a condo. What can go wrong?
Yeah. So anyway, this is what went wrong. So fast forward 6-7 months later. And after 6 months, at least here, that means the rehab went terribly wrong. And that's when, because we only model in like a 5-month hold usually. And that's when things start. And this is very expensive to hold. So ultimately, we lost money on this because what happened was once we did get it approved, that buyer didn't want to wait and they backed out. And we couldn't hold them to the contract because technically we couldn't produce a 3-bedroom home for them.
Yeah.
And we had to remarket it. So I think ultimately we sold this thing. I want to say it was like a 12-month or 13-month hold. We had to pay an extension fee with the lender. So it literally went completely south. And I think we lost like $25,000 or $30,000 ultimately on this deal.
But you got your taxes lowered.
Yeah. Wonderful. Yeah.
You got your taxes lowered. That's how you can reframe that.
So I guess what the moral of the story here is we miscalculated, and I didn't anticipate that this problem would occur, and we probably should have not done such a skinny deal at a higher price point.
Well, listen, but I would probably do that same deal if I were you, like, before obviously it happened, because I love condos for the sense that normally, unlike your scenario, I mean, you're buying a 2-bed condo, it's a 2-bed condo. I mean, it's plain Jane. Like, there's no, like, you're not going to put an illegal addition on your condo because it's a fucking apartment.
Well, that's why I thought we have
that's a door. Why I buy
there was a window there. I mean, so
I normally buy condos, dude, sight unseen. I don't even need to see them. Like, I have 2 properties that I own. I've never stepped foot inside these things because I'm like, I know they're rentals, number one. But
generally, you're right. And then we didn't think there was much risk either. But
pesky condos will get you. That's hey, quick question. Did you end up closing out that Glenwood Landing property that Richie sold you in Long Island?
Yeah. Wait, that was
a pretty good deal. That was a good deal.
That's
in Nassau. Yeah. It's in the North Shore. Glenwood, right by Like,
Yeah, we sold that.
clean.
We've got another one in Long Island that we're working now that we're in contract to sell it, which is
So,
it was actually a very large rehab. We did that. That
Suffolk
was the deal I think we got. It's
or Nassau?
it's in Nassau.
Okay.
No, that's the Glenwood Landing deal, Greg. That's the Glenwood Landing deal.
Oh, you're in contract to sell that.
Yeah, you're talking. You know what? I got confused because the address isn't Glenwood Landing. The town is. It's just
Yes.
Glenwood Landing.
Yes.
Yeah.
Yes.
So
Yes.
yeah, we have that one is in contract to sell. That was a very large renovation, but the
Yes.
spread looks really good, assuming that it's not
The
closed until it's
apocalypse
closed.
doesn't come. Yeah.
Yeah.
Well, listen, Larry, this was a good show, man. So if people want to connect with you and learn about maybe investing in your fund or just connecting with you, like what's the best way for people to reach out to you, man, if they're interested?
So I would say just to shoot me an email. It's Larry Larry at SDF Sam David Frank Capital LLC.com. So Larry at SDF Capital LLC.com, and love to talk to people and kind of, see what's going on and how I can help.
Cool. So Larry at sdfcapitalllc.com. We'll make sure to put that in the show notes. Larry, this was a good interview, man. It's always good to catch up with you on the record and have all the people hear the good and the bad about this business, man. It's a pleasure doing this.
All right, Greg. Always awesome talking to you, and looking forward to hitting the links again soon.
Yes, I'll be back in New York in 2 days. So
Sweet.
I'll be around.
Well, let's get together.
Absolutely, man.
All right. Awesome. Thanks again. See ya.